Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, May 22, the year 2019. Let's talk trading. What's on your chart? Well, it's FOMC day. The announcement should come out within, the next 45 minutes or so. So we'll probably see price move. So it's really important, as it's always is, to have your money and risk management in place. Now, as you can see, we still have 5 pairs that haven't filled the gap. 4 of them are Aussie pairs. Now, if I remember correctly, yesterday, I think the price was up here somewhere, but we know it went up there. But you can see here, it came back into the upper weekly wick zone and exited. So wick zone traders right now, if you're still in that trade, are up about 26 pips. For the year, we're down. For the week, we're up. For the month, we're down. This is all on the euro yen. You can use, you can analyze the pairs you like to trade, but I like to stick with the one pair. It shows consistency, and it shows how you can use the same methods over and over every day, not worrying about, quote unquote, what kind of market we're in. Is it trending? Is it consolidating? Is it sideways? All those silly things that some traders like to talk about. But that being said, I make fun of, squiggly lines and some of these things that are conceptual, but none of that really matters. All it matters is whether or not you found something that works for you. So if you like squigglies, carry on. If you like certain concepts like supply demand, support resistance, carry on. I was reading a thread this week, or a post somewhere, where the guy was saying that you support resistance, you're trading dead lines. They've already happened. And I was thinking I could maybe even do a whole video on horizontal lines, dead or alive. But it doesn't matter. I mean, if some guy says you're trading dead lines, it's like, so if it works for you, keep trading them. And then I also got a post where this traders talking about a hedgehog method or concept or something, where you decide what you think you can be the best in the world at, and then you couple that with a couple of other things, and then you're going to somehow produce these great results. Maybe it works, maybe it doesn't. Bottom line is, if you believe anything out there when it comes to the market, chances are you're not going to be very profitable, because the market's going to do what the market's going to do. Because see, all your analysis is based on history, including the statistics that I run. It's all based on history. But when I put that trade on, it all goes out the window. We're just going to have to see what happens next. And that's another thing I'd like to mention. We've talked about consistency and discipline and having a trading plan and following that trading plan and not rushing. Some guy was out there talking about leaving too much money on the table, but that's hindsight. It's after the fact. I mean, yesterday on the euro yen, I had a trade, and I think I dumped out at 123.14. And you see what happened. I mean, it hit let's see, yesterday it hit a high of 123.73. I mean, yeah, I left 60 pips on the table or something. It's like, no, I took about 50 pips off the table. So you can't really look at the hindsight, and look at where price is. It's back below where I had bought, or actually I had bought, all over the place. But the thing is, it's now I'm getting in at a much better place where I exited. So that's just the way it works sometimes. So bottom line is just don't believe all that hype and all the nonsense and these guys that start out with one system and about 50 pages into their thread it's already morphed into something else. I mean, each one of things that I present, they stay static. I mean, there's very little deviation, like the buy zone or the rat zone. I haven't changed a thing, and that's decade old. Just like now we're looking at this opening range. We've got the opening range for the week, and what happened? Price busted out of it and came back in it. In fact, I still need to write that indicator because I'm not sure if I can do it in the, or I might have to modify some of my analysis indicators to see if we can say, okay, if price, here's the price of the Monday or first trading day of the week high, and did price close within that range or did it close above or below? Run some statistics and see not only did it close above or behind, but how much higher did it get than the first day of the week, and how much lower did it get than the first day of the week? And run that analysis and see if there's an edge there. So far, still below all the opens and still below all the ranges. Even though yesterday we did finally get above one of them, but price didn't hold there. Inside bar, we're coming right back to that inside bar area. Are these dead lines? Well, they sure proved profitable. So once again, take what you hear with a grain of salt. Use your own eyes. Do your own trading and see what works for you. Okay, the range today, 52 on the euro yen. We've got only 5 over 100, all pound pairs. But as you can see, probably waiting on that FOMC announcement that's coming up at the top of the hour here. We'll see if what price does. Does it bust one way or the other? And on the holos, you can see right now we're at a holo. So Randy real-time trade. Holo being the H1 lowest open of the day, and the ho and low, yeah, right. The ho part, H1 highest open right here. And you can see the weekly H1 highest open occurred yesterday. And the weekly lowest open occurred on Monday right there. Buy zone, pivot point right near the open, so no directional bias, pretty much trading what you see. If you took that short, you got burned, but then you could have made it up on the long. Here, pro trade, once again, pips take off the table. Here you go, a short, money to be made. Right here, you should have exited as worst case is price left that buy zone, or rather the wick zone. See here, another buy zone trade. Once again, scrape through that top, take money off the table. Especially, the ranges have been tight. I mean, we've only got 52 pip range. There's no reason to sit in these trades thinking you're going to, get the Magilla trade. Magilla. I wonder how many of you traders know what that reference is. Please put a comment down here if you know when I say Magilla. Let me know if you know what I'm talking about, what I'm referring to. Be interested. And you can see here, not much separation, only 12 pips, but we do have a live rat zone trade. But remember, top of the hour is going to be FOMC. You might want to wait, or you just might want to actively trade. That's up to you. Pivot, we took out. It was so close. It was really hard to miss. Daily pivots, just 2 missed for the month. Who knows? FOMC, maybe it takes out a pivot. Let's see, where do we have pivots here? We got one way down here. I got one way up here. So you can see we are, interesting. We're 145 pips away from here and 144 pips away from here. And I don't know why that keeps happening. Price action. I think I answered the question, but one ball at the bottom. You can see here, you got a 2 ball at the bottom. The indicator's telling you you want to look for a long next bar. I mean, once again, horizontal lines, does it matter where you place them? No. What matters is what you do at the line. It's like price hits the line, but see, it started out here. So first line it encounters, price is moving which way? Up. So which way do you go? You go long. Price opened here. Which way is price going? It's going down. It encounters the line. Which way do you go? You go short. I mean, that's just how simple it is. I mean, you can space these 10 apart, 20 apart, 25 apart, 100 apart. Doesn't really matter. But it's just a simple trading what you see. It doesn't get any simpler than that. I mean, you can literally not have any indicators on your chart and just look. Price starts here. It hits a line and it goes. I mean, pick any of these. Price started here. It hit this line. It went up. It came back down. That's money to be made. What happened here? Price started here. Hit the line, went down. Any of them. You could say here, price started down, hit the line, came back in. You could stop out. Okay, maybe that was a loser. It happens. It's trading. But more times than not, they're going to be winners. At least that's what statistics say. But remember, these videos are for educational purposes only, and your results may be different than mine. Disclaimer. Wick zone, in and out, in and out. It happens pretty much every day. Once again, more horizontal lines. Trading here at the line, you can see, wasn't much action. You just pretty much scratched that trade. Trying the other way, there was profit coming back on the bounce. You have indications you should go long. Take it, money to be made. Once again, short at the line, oscillation. You just pretty much trade what you see. Last crossover of the line points the way. And here you can see for the last few minutes, tick chart, not much happening. About a 3 pip movement. But once again, I think everybody's gearing up for FOMC. And you can see it here with the Einstein lines, just a little. And so here you open the chart here, and then you look back and you go, price really hasn't done much. So maybe if you take that trade and you see it come back, you just scratch it. And this, here, it's like, well, it didn't reach that trigger line. Maybe you take it. Maybe you take this live trigger here. Here you go. Another Randy real-time Larry live trade. What do you do? That's really up to you. Let's see. We looked at these different highs here. I'm kind of liking this, especially for scalping. You just want to go in, pick up a pip here, a pip there. Seems to work well. Oh, this is just when highs, when support becomes resistance or resistance comes support, or when the same highs double up, or when the same lows double up, just to see how price reacts at those horizontal lines. And frequency distributions, the range 52, 121 for the week. But fellow traders, when you're out there trading, just remember, it doesn't matter what other people say. It's not what you trade, it's how you trade it. Drain the